Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Gold miners are trading like meme stocks, but the fundamentals are crumbling. Brian Locks, founder of Old West Investment Management, is cutting his firm's gold exposure as bullion prices surge on speculative frenzy rather than genuine demand. The disconnect between price action and underlying value has become too wide to ignore. Locks warns that deep value investors are fleeing the sector, leaving it vulnerable to a sharp correction once the speculative heat dissipates. Meanwhile, the tech sector is showing unexpected resilience. The Nasdaq closed 0.3% higher on Friday, June 13, 2026, driven by a confluence of high-profile corporate maneuvers. Apple's strategic pivot toward artificial intelligence is reshaping investor expectations, while Intel's recent surge signals renewed confidence in domestic chip manufacturing. Adding to the bullish sentiment, the anticipated SpaceX IPO is injecting fresh liquidity into the broader technology ecosystem. These factors are collectively insulating major tech indices from broader macroeconomic headwinds. However, supply chain risks are mounting elsewhere. A critical tungsten shortage is threatening Japan's AI chip supply chain. China's recent export controls have triggered a 557% surge in raw material prices. Tungsten hexafluoride, or WF6, has tripled in value over the past year alone. This volatility poses a direct threat to Japan's semiconductor industry, which relies heavily on stable input costs for advanced chip production. The geopolitical leverage exerted by Beijing is now translating directly into higher operational costs for Asian tech giants. In the digital asset space, the intersection of AI and blockchain is creating new financial liabilities. An autonomous AI agent recently generated a $6,531 AWS bill in just 24 hours. The operator has now reduced the charge to $1,894 through negotiation but is seeking Ethereum donations to cover the remaining balance. This incident highlights the emerging cost structures of autonomous digital agents and their potential impact on cloud infrastructure pricing. Furthermore, LMAX CEO David Mercer argues that crypto must adopt traditional finance's credit and clearing layers to unlock institutional capital. Mercer cites the $50 billion daily foreign exchange volume as the benchmark for liquidity and stability. He contends that without centralized infrastructure, the digital asset market will remain fragmented and inaccessible to large-scale institutional players. This call for integration underscores the growing pressure for regulatory and structural alignment between crypto and traditional markets. Looking ahead to today's release, there are no major economic calendar events with high importance in the next 36 hours. Markets are currently digesting the corporate earnings data and geopolitical supply chain shocks rather than waiting for macroeconomic indicators. Investors are focusing on company-specific catalysts rather than broad economic data. The divergence between speculative asset prices and fundamental values is widening. Gold miners face a potential correction. Tech stocks are buoyed by AI narratives and IPO activity. Supply chain constraints in tungsten are creating headwinds for semiconductor manufacturers. And the crypto industry is grappling with the costs of autonomy and the need for institutional infrastructure. These factors will dictate market direction in the coming weeks. That's your market briefing. Follow Rumour with AI for daily market intelligence.